Hi everyone, it's Sunday night and I wanted just to take 15 minutes. Now Sunday night is normally when I do a big review of the markets and look for any major changes that's been happening. Obviously I'm reviewing trades and markets throughout the week, but this week I want to touch base on a previous video. Back in December 2010 I went over the conditions of the Dow and what I thought might happen to the Dow, because there was a lot of rumour that that was the turning point and we were going to see a big downward move in the market. That was December 2010, but I'm wanting to put this video together now because it's been a while, but we have seen some shifts in the market. So I'm going to have a quick look at both of those markets, give you my thoughts, and go and have a look at some of the other markets that are out there. But my advice to you at this point is keep an eye on what's going on and use Sunday nights to do an overall view of where you're at and an overall view of the markets. I find I'm much more profitable, much more effective if I take just an hour or so on Sunday night to review my trades from the week before, go and have a look at the main indexes, the main currency pairs, gold, oil, and just get a perspective before the trading week starts on the Monday. So I hope you enjoy the video. Hi and welcome to part 2 of Is This the Turning Point for the Dow? And I want to change the title a little bit, because in part 1 we said, is this the turning point for the Dow? I actually want to say, is this the turning point for the Dow and the S&P? Because a lot of what I'm going to talk about over the next 10-15 minutes or so is how the S&P is playing an important role in my decision-making process of what's happening. Now, if you haven't watched part 1, please watch part 1 first, because I go into more detail about the overall condition of the Dow. Now, that video was made back in December 2010, and a few of our students have asked me, well, why haven't you produced another video yet? And the simple answer is, if you look at a daily chart of either the S&P, you can see here, or I switch that to the Dow, and you look at the Dow here, neither of these two charts since December of last year have really done anything. Ultimately, and if I go up to the weekly, you can see it in even more detail, they've pretty much gone sideways since that point. So we've not really seen any change since December. So I've not had any more of a bullish or bearish opinion on the Dow or S&P since I made that last video. Now, if we cast our minds back, and I'll just quickly put the monthly chart, you'll remember I talked about in video 1 this idea of where we are in terms of a cycle. And if we compare the 99 crash, the move down, the correction, and then the 50% increase in the market, and then the 2007-2008 crash with the banking crisis, the correction, and then the additional 50% more, it's actually done slightly more than that. But we also look at the distance, what you've got here between here and here, the time between here and here, you'll see that's happened, excuse my drawing, time's happened again. So we're into the zone where the market is hitting a cycle point. So between here and here, here and here. So if someone to say to me from a time point of view, are we in an area where cyclically we could see a move down? I would say, yeah, we could potentially see a correction. Whether that correction's down to a previous resistance, whether it's down to a moving average, I don't know. I haven't got a crystal ball, but certainly from where we are, things look, as they currently stand, that we might get a correction, and we're due it based on the time. Now, before I start selling and selling short, medium to long term, there are some things that I'm looking for. Now, if we go and have a look at a daily chart, and I just pull up the daily chart of the Dow, what you'll notice is we were starting to show and putting a little bit of pressure around this level here, and then we had a breakdown. And what I was looking at was, I was looking at the lows from here. So very, very simply, I was looking to see whether or not we were going to test these lows just here. And we were actually going to test those lows. And we did that. We did that on Thursday. And you'll notice that we tested those lows on the Dow and actually blasted through it. So two of the biggest downward days for a long, long time. And we had similar size ones here, but then we've had a response back, where two together like that. So the market has had a bit of a flush out and a bit of a move down. Now, I think what's really important in a scenario like that, some of our traders have had some short-term swing trades where they've got in and around this level here. If I just show you Eddie. Eddie was away on holiday and he actually placed a trade. He's showing you a 240 chart just there. So he placed a trade and picked up 381 points because the setup met his criteria. So essentially, he had traded from here to here. Now, I haven't had a chance to speak to Eddie yet, just to see whether or not he took some of the trade and rolled it over, because if he has, he's had a hell of a move. But again, that's quite a short-term swing trade. We've had a very short-term bullish view on the Dow, especially at least down to these levels here. For me personally, I wasn't expecting necessarily a big move down, or a move that quickly, but when I saw the candle close below that level, on Thursday, I said to the traders in the room that we may see some further downside because we've broken these levels here. And what I also did was, I think what's really important for you to look at is not just look at the Dow, but have a look at the S&P as well. Because what you'll notice is the S&P has got another area of support here, which you'll notice if I flick back to the Dow doesn't have that. The next level of support on the Dow is down, well, I mean, there's some lows here. There's a couple of lows just here, which is close by. The next level around this level here. So the Dow's getting close, but you'll notice if I just go back to the S&P that the S&P's actually got a cluster of lows just here, and this low from December, which the Dow has already beaten. So we are getting into an area of support on both markets. So that may mean going into next week we see a little bit of a correction. We see short traders taking profit, bullish traders getting back in, looking for a bounce. And again, what's key now is what happens over the next couple of weeks. Do we get a move back up? And if we do, how big is that move? And essentially, do we actually see price move back up? And if we make a lower high, especially below these lows on the S&P, and then come down for a retest, then again, I'd be looking very bearishly short to medium term in and around this level here. But what's important, if I'm looking at a long-term point of view and a medium-term point of view, that I don't just look at the daily chart. I want to actually go and look at the higher time frame. So let's go and have a look at the Dow first. Go and have a look at the weekly chart. And what you'll notice here is we've really had a really good, strong, significant close below the 50 moving average, the 100 moving average, which we haven't really seen throughout this whole move out. We had a couple of dips back here in 2012, 2013, where we've and here in 2014, where we've tested, gone a little bit below the 50, but very quickly gone back up. Whereas this is the first time on the weekly you see we've not only closed below the 50 back here about a month, 6 weeks ago, we're actually going further down. And if I go up to the monthly chart, you'll see this could potentially be, and again, we've got another week to go yet, so we'll have to wait and see. But if you look at this most recent candle, this is the first candle that we could see a close below the 21. And if we get that on the Dow and the S&P, so I'll be looking for both, not just the Dow but the S&P. If we get that on both, in that scenario, then I would be looking sort of medium to long term from a trading perspective, not necessarily from an investment point of view, more a trading point of view. I'd be looking for a further move down, at least to the 50 moving average, and possibly these highs here. And if we just go and cross-check that on the S&P, it does look slightly different. Here's the weekly S&P. For the S&P, this would be the actual first candle that's closed below its 50 moving average. And then if at the end of the month, you'll notice here the S&P is actually on its monthly 21, that blue line there, and the previous support. So I'm waiting really, if I'm thinking medium to long term, I'm going to wait and see where this monthly candle runs out, because I don't know what's going to happen over the next 7 days. There could be a big retracement, there could be a big buy back into the market as a result of this little flush out, or we may remain strong to the downside. So looking at it, yes, there may be some short trades if we put some pressure lower down, but we are at support, so I'm not going to be jumping in just because I've seen two big downward days and a weekly close on both markets, because that's not how I trade. I'm waiting for my setups to occur, and I certainly don't want to be going short into a support level. What I want to be doing is waiting to see how price reacts to that. So is this the turning point for the Dow? A turning point for the S&P? It could be. Are we showing some bearish signs? Yes, on the weekly. We're seeing some closes below 50 moving averages on both markets. On the monthly, we're getting close, but again, I'm not going to make a decision on a monthly candle until the end of the month. So I'm going to keep you a little bit more updated on these two markets because we've seen a little bit of price action that's pushed a little bit further down. But I always think it's important when you're listening to the news and you're hearing all the hype and all the stuff on Bloomberg and everybody else saying the markets are crashing, is actually when you pull up a monthly chart is very, very good at putting what you're hearing short term into perspective. Okay, so if you look at this monthly chart, it's not a big deal yet. It could be. But at the moment, it's not a big deal yet. We've still got a week to go, as I've already said. So just bear that in mind. If I flip to the Dow, even the Dow, yeah, it's showing a stronger candle below the 21 moving average. But in perspective, it's still not a big deal. So just be careful before you start shorting everything. You may want to be tightening up stops if you've been in long trades for a while. You may want to be, if you're looking at mutual funds that are tracking the index, you may want to be a little bit careful, or you trade stocks, or you've been you've been holding shares in big companies that really reflect the movement of the main markets, you may want to be a little bit cautious about this and just be aware of what's going on. But again, it's not Armageddon just yet. And in terms of other markets, if we go and have a look at gold and silver, we've seen a little bit of a reaction to the upward movement here. If I just show you a chart of gold, but again, it's very marginal. There's the monthly chart of gold. We've been pushing down ever so slightly. I'm not going to go into the details or the reasons why I believe you haven't seen, although the amount of purchasing of physical gold and silver is pretty much, I think it's almost at an all-time high, and you've got China still buying up lots and people buying up. And what's interesting is I've been buying a little bit more recently, and I had to wait, I think, 2 weeks to get delivery on the gold bars that I was looking at. I had to wait a couple of weeks, and I've never had to do that with the supplier in the UK that I use. So that was interesting. So I think demand is very high, but that's not necessarily being reflected in the price. And I think that's a lot to do with the fact that the price you see here, the spot price, is also to do with the paper transactions of gold. So gold futures and gold ETFs, which do play a part in the price at the moment. So yes, you are seeing, as you can see here, there's a little bit of a response. The weekly chart is quite good for this. So you've seen a couple of weeks now where price is just pushing up, maybe in response to what we've seen with the US markets and what's happening in China, but it's still pretty insignificant. It doesn't change my long-term view in terms of gold as an insurance policy, holding gold for the long term. I still think you're good, if you're buying in here. And for me personally, I don't worry too much about what the price is. I just purchase a specific amount at the end of every month, and obviously on some months I'm getting a good deal, on other months I'm paying slightly more, but I don't care because I'm looking at it over the long haul. So a little bit of response from gold there. Silver, again, even less of a response. But one of the things that's important to know is gold and silver's price didn't react immediately back in 2007, 2008. You'll notice here going into 2008, silver actually went down in value throughout nearly all of 2008. And you'll notice if I go and look at gold, very similar scenario here on gold. For 2008, you saw a downward move, which again was very much, if I go back to the Dow and S&P, in line with what you saw in 2008 on the Dow. That was going down. So it wasn't actually until later on that you started to see gold and silver's price relative to that go up, because there's so many other factors that you're looking at. Sorry, I've just pulled oil up there. You want gold. There's so many other factors that you've got to consider, because there's obviously what's happening to the value of currency, and again, that's not something I'm going to get into in this video, but it's interesting to see there has been a little bit of reaction with those markets. Oil, we're looking at about $40 a barrel. You can see we've taken the lows out of February, and it does look as if we're going a little bit lower here. If I just go to a daily chart so you can see that, we've put in a couple of downward candles below the support level just here, so we'll see where oil goes. But there's all sorts of things on Bloomberg and on God knows what websites about where oil's price is going to go. From a trading point of view, I'm not concerned about that. I'm waiting for my setups to occur. So in summary, I think be wary of what's happening with the Dow and S&P, but be wary from a chart perspective. Look for the chart to be doing something differently. So what has it done in the past? Simple pattern is on the Dow. Remember this, on the monthly chart, we've had no closes below the 21 moving average all the way back. The last time we got that was back in 2010, and we still went up. So for me, that's the first consideration. If we get that, then I'm going to take a longer term bearish view, and I think I'm going to repeat myself here on the S&P. It's pretty much the same with the S&P. Until I get a close below that, then my long-term bearish view is there, but I'm not ready to push a button on that from a long-term point of view. But there could be short and long trades happening over the next couple of weeks. Obviously, in the trading room, we're doing more short-term swing trades and day trades as well. So again, we're not necessarily taking a view that lasts that long. So I may have that view that I'm waiting to look for a short trade long term, but actually day to day I might be placing a couple of long trades whilst we push back up. So lots going on at the moment, very interesting. Summer months generally are quiet. September, things can pick up. It's not an absolute given that they will as soon as we go into September, but it'll be interesting. A lot of traders will come back off holiday. Fund managers, big institutions, people will be back, so it could impact things a little bit. So do keep an eye on the markets. Keep an eye on any videos we're sending out. If you want to share this with anybody, any comments, just pop them in the box below, and I'll look forward to seeing you in the next video.